What is going on, everybody? Welcome back to another dividend review. In today's video, I want to go over DIVO, Amplified ETF Trust and Monthly Dividend Stock. With that being said, let's cue the intro and jump right into this one. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay guys, so this one is something that not a lot of people have probably heard of. It's not a well-known stock, it seems like. So again, if you look at the 1 year on just about any stock here lately that's worth a dang, it's going to be up like 20%, 50%. Some of them are 30%. I want to go look at the max because the max overall is what's really going to matter to me. And we've talked about, not only getting that monthly income, because we invest into these monthly income stocks because, again, we want our monthly income to grow, and you get that compounding effect a little faster, and you see it, everybody just likes it a little bit more because you're getting paid monthly, not quarterly. So it makes a big difference to a lot of people. Me personally, I like to have a little bit of best of both worlds, because so a lot of people are going to tell you, you shouldn't be investing into these companies like DIVO and Amplified for, when you're young, because, you should be trying to get as much growth as possible out of your investments. But me, I like to have the best of both worlds. Now, I'm in a little bit of a different situation than a lot of people. I understand that before you comment that. But even for my little brother that hasn't invested very much, 19 years old, I would be telling him, if you can get monthly income and you can go on ahead, if you're going to take half and put it in the S&P 500 and then half and try to get it into income funds like this one, I don't think it would be a bad idea whatsoever, and you're going to start getting that compounding a little bit faster. Now, with DIVO, you're going to get a little bit of the best of both worlds because obviously it seems to continue to go up. Now, one thing I like about DIVO that you're going to see is a little bit different than like a QYLD or different things like that is this. Their pie is very diversified. Now, why do we care about diversification? Because if you look at something like a QYLD, yes, they're going to have a better monthly dividend and stuff like that, and you may have a little bit of a better return. I doubt it, to be 100% honest with you. This one's probably going to it's probably going to have a better return on it overall, just because now the stock price may be a little bit higher, so you're not going to get as many shares, you're not going to get quite as high of a dividend, but you are going to continue to get appreciation in your capital. And again, that's why we want to look at the max, not just the yearly. And as you can see, as it just continues to go up, now everybody knows 2020 happened, and then again it seems to take off with the rest of the market. Now we are at an all-time high, so it's maybe something you want to be looking for on a red day, and not just any day, but the holdings of it. You can see it's financials, industrials, healthcare, consumer clinicals, technology, consumer defense, basic materials, energy, utilities. Again, guys, utilities is something that I've invested in since I was 18, 19 years old. I love them. You have to have your utility. Duke Energy, that was the one that I invested in because that's who I've used, and that's who I pay my electricity bill to every month. So top 10 holdings, it goes through all of this, and these are all really good companies, and you got to be sitting here thinking, how are they getting their income? Well, they do multiple different things. They do some covered calls. They keep cash. As you can see down here, they keep a cash equivalent of probably about 10%. Right now it's at about 7.73%. So if you round that up, but about 10% they're holding in cash. I would say probably 8% realistically. And then so that's something you got to be looking at as well. Now we're going to go into the dividend. This is something that, I really, really like, and it does change a little bit. So, you're not going to get the complete consistency that you're going to get some other stocks. But remember, you're getting that capital appreciation. Unlike a QYLD, if you look at the chart, it slowly just continues to decrease. Slowly. I mean, it's a very, very slow thing. You're getting that income to make up from it, but you're not getting all the gains that you could be getting is the best way to put this. But again, you're getting around 15 cents a share right now. It looks like the lowest was 10 cents a share. But this company seems to be doing well. You've had a high of 16 cents. No, there's a high of 31 cents down here, which was really good. Those look like they were special dividends, though, to be 100% honest with you. But again, DIVO seems to be doing really, really well. The other one is, and again, if you guys want to know more about their exact strategy and how to kind of go through things, I'll show you where to find that out. The other thing I want to go through is I want to compare it to the S&P 500 like we do every single fund. We make sure we compare it to the S&P 500 because if it can't beat the S&P 500 and stuff, why would we invest into it other than the monthly dividend income? So like normal, $1,000, we put $500 in every month just because that's what the average car payment is in America. Allocations 100%. And then here we get to what we're looking for here. So SPY is in blue, obviously. HRZN, which was the one that we just did a review on, the last stock that we did a review on, actually outperforms it. Now here's the thing. DIVO stays right along with the S&P 500 for the most part. Now you got to remember, they do have major companies that are all in the S&P 500, it seems like. So you got to remember that as well. Plus you're getting a little bit more income. So it is going to slightly be down from it. So if you look at the overall, DIVO is slightly under the S&P 500. Here's DIVO, S&P 500's up here. You are slightly under it. But here's the main factor here, and why I would rather, or why I would put money into DIVO rather than the S&P 500 always, is the income factor. You're going to get more shares of DIVO every single year and letting it keep compounding. Now, again, maybe you should just consider getting the S&P 500 if you're 18 and just continuing to buy. Me, I like to do both. Like I've said before, I like to have the growth and I like to have the monthly income. So I would rather buy something that's going to continue to appreciate and give me monthly income for that compounding. So, you know, if you put $1,000 in it, maybe you're getting, like $6 a month basically added to your income. $6 a month adds up if you just continue to throw $1,000 in it every single month. And if you can do more, I always tell you to do more. But again, SPY at $431. Let's go over to this one for last year. SPY, you're going to make $503 extra in dividend income. Horizon's at $3,056. Again, watch that last video. And then DIVO, $1,369, which DIVO is not bad for having the capital appreciation that it has. Now, again, we're at all-time highs. You get to make that choice on whether or not you want to buy that. But again, stock market's at all-time highs. Everything's at all-time highs, it seems like. So that's where you get to make your decision. This video right here, I'm going to put the link below. This guy right here on the right-hand side is actually the manager of DIVO. So if you guys want to understand more what they do here, how they allocate it, how they get more, how they get your monthly income off of it, click the link below, watch that video, let me know, leave a comment if you have another stock that you want me to review on, and I look forward to seeing you guys all in the next video.